Biomed, Nexus Daily Updates, your essential biotech, medtech, and pharma recap. No noise, just what matters. TLDR. The Section 232 Pharma tariffs take effect today, a 100% duty on patented drugs and their ingredients for large companies. But the headline rate is a stick, and the exemptions are where the real story lives. Q2 earnings are coming in strong, with every early medical sector reporter beating estimates, J&J raising its outlook twice, and Novartis and GSK topping expectations. BMS reports today. Replimune shares slumped about a third after harsh FDA reviews landed ahead of its melanoma adcom, capping a brutal week for the two companies facing surprise hearings. Arrowhead's plozasiran hit in Phase 3 for severe hypertriglyceridemia, and its shares jumped 20%, while an early obesity readout doubled the weight loss of Lilly's tirzepatide. The EU cleared 2 new Rinvoq indications for AbbVie, extending one of its most important post-Humira franchises. Executive takeaway. The day we have pointed to all week is here, and the tariffs are more complicated and more revealing than the 100% headline suggests. As of today, the Section 232 national security tariffs take effect for large pharmaceutical companies, imposing a 100% duty on imported patented drugs and their active ingredients. That number is designed to grab attention, and it does. But read the structure and you see what is actually happening. Companies that signed most favored nation pricing agreements with the government, roughly a dozen of them, are exempt into 2029. Drugs from the EU, Japan, South Korea, and Switzerland face 15%, not 100%. UK products face 10%. Companies with onshoring plans approved by Washington face 20%. Orphan drugs are exempt entirely, and generics and biosimilars are carved out for now. The 100% rate is not really the policy, it is the stick that herds companies into the deals, the onshoring commitments, and the pricing agreements that carry the lower rates. Almost nobody large actually pays 100%. The whole design is coercion toward reshoring and price concessions, dressed as a tariff. This is why we have said all along that the tariffs are a blunt instrument aimed at a real problem. They will not by themselves make domestic generic production economical, and the generic tariffs coming in 2028, phasing from 0 to 100% and eventually 200%, still run into the brutal math of pennies per pill. But as leverage, the structure is effective. It gives every large company a strong reason to negotiate an onshoring plan or a pricing deal rather than eat the full duty, and that is clearly the point. Watch over the coming weeks for the wave of onshoring announcements and pricing agreements that the tiered rates are engineered to produce. The companies that already moved, the ones we have covered committing to US manufacturing all year, look prescient today. The week's other thread also paid off. Q2 earnings are coming in strong. Every early reporter in the medical sector beat both earnings and revenue. J&J raised its full-year outlook for the second time, and Novartis and GSK topped expectations. The soft J&J oncology print that opened the season now looks like the exception, not the trend. The read we carried all month holds. The sector is genuinely healthy, unevenly but broadly, and the numbers are backing the mood. Read full analysis policy. The 100% tariff is real, but the exemptions are the actual policy. The Section 232 Pharma tariffs take effect today for large companies, applying a 100% duty on imported patented pharmaceuticals and their active ingredients, according to multiple trade law analyses. The structure is tiered, and that is what matters. Roughly a dozen companies with most favored nation pricing agreements are exempt until early 2029. Drugs from the EU, Japan, South Korea, and Switzerland face 15%. UK products face 10%. Companies with government-approved onshoring plans face 20% into 2030. Orphan drugs are exempt, and generics and biosimilars are excluded for now, with a formal generics review due within a year. The takeaway is that the 100% headline rate functions as leverage, not as the expected cost for most large players. It pushes companies toward onshoring commitments and pricing deals that carry far lower rates. Separately, the generic tariffs announced last week phase in over 2 years, staying at 0 until 2028 before rising toward 100% and eventually 200% for companies that do not build US capacity. And Section 232 investigations are already underway in medical devices, PPE and robotics, so this is the first wave of a broader healthcare supply chain tariff program, not the end of it. Earnings, the quarter is confirming the sector is healthy. Q2 earnings are delivering and the pattern is now clear. As of late July, every medical sector company that had reported beat both its earnings and revenue estimates, according to earnings trend data. J&J raised its 2026 outlook for the second time this year on strength in its innovative medicines business. Novartis beat and reiterated guidance, powered by Kisqali, Kesimpta, and Scemblix. GSK reported better-than-expected results alongside its restructuring. BMS reports today with Regeneron, Abvai, and Viking also on the calendar this week. The through line we set Monday was whether the prints would back the buoyant mood, and so far they emphatically do. The lone early stumble, J&J's oncology miss, looks idiosyncratic against a broadly strong season. The sector is not just feeling healthy, it is posting the numbers to prove it. Regulatory Replimune got hammered before its hearing even started. Replimune shares slumped about a third after FDA reviewers issued a harsh assessment of its melanoma therapy RP1 ahead of its advisory committee meeting, according to the Pharma letter. Coupled with the doubts raised about Capricor's Duchenne filing, it made for a brutal week for the two companies the FDA called to surprise adcoms. The agency saying the RP1 data package was not interpretable is about as discouraging a pre-hearing signal as exists, and the market priced it immediately. It sharpens the puzzle we have tracked. The FDA accepted this resubmission just weeks ago, a friendly signal, then publicly savaged the data before the panel could weigh in. That whiplash is the uneven reset we keep describing, and this week it cost Replimune shareholders a third of their value in a day. The EU expanded Rinvoq again. ABBV, the European Commission, authorized 2 new indications for AbbVie's Rinvoq, upadacitinib, according to the Pharma letter, extending the reach of one of the immunosuppressants central to AbbVie's life after Humira. Rinvoq and Skyrizi have been the engines carrying AbbVie past the Humira patent cliff, and every label expansion deepens that franchise. It is a quiet but meaningful win in a week dominated by policy and earnings. Obesity and RNA Arrowhead delivered a Phase 3 win and an obesity tease that turned heads. Our Arrowhead Pharmaceuticals said 2 Phase 3 studies of plozasiran in severe hypertriglyceridemia succeeded, sending shares up 20% to around $91. 48 according to Biospace. More striking for the obesity race, the company's early-stage ARO in HBE showed roughly double the weight loss of Lilly's tirzepatide in an interim readout from a small group of patients. That is a preliminary signal from tiny numbers, so temper it heavily, but it is exactly the kind of next-generation mechanism that could eventually pressure even Lilly's dominance. Jefferies called Arrowhead ahead of its peers across the INHBE and ALK7 obesity programs. In a category where we keep saying Lilly's lead looks unassailable, this is a reminder that the next wave of mechanisms is coming, and some of it is showing early promise worth watching. The week in review Monday, retatrutide hit in 2 more pivotal trials, widening Lilly's obesity lead. We set the tariff deadline as the week's thread. Tuesday, Argenx paid $2, 2B for Fort to grow beyond its blockbuster, while Sanofi's $1. 4B Kymab bet faltered. Wednesday, the FDA cast doubt on Capricor before its hearing. GSK launched a 2,5B restructuring. Thursday, a GLP-1 drug curbed heavy drinking, widening the class's frontier into addiction. Friday. The 100% Pharma tariffs took effect, with the exemptions as the real policy. Earnings confirmed a healthy sector. Replimune cratered ahead of its AdCom. RID, full analysis, Biomed Nexus. Pro, institutional intelligence. Brief, decoding the tariff and what companies do. Now, the section, 232 tariffs taking effect today, are widely misread as a 100% cost. They are better understood as a coercion mechanism, and reading them correctly tells you exactly how companies will respond. The structure gives it away. The 100% headline rate applies in full only to companies that do nothing, sign no pricing deal, commit to no onshoring, and import patented products from origins without a negotiated rate. Almost no large company will sit in that position. The available off-ramps are numerous. A most favored nation pricing agreement exempts you into 2029, a commerce-approved onshoring plan drops you to 20%, and manufacturing in the EU, Japan, Korea or Switzerland caps you at 15%, the UK at 10%. Orphan drugs pay nothing. The policy is architected so that the rational move for every large company is to negotiate into a lower tier, which means accept a pricing concession, commit to US production, or both. That is the actual goal. The administration wants two things: more domestic drug manufacturing and lower US drug prices, and the tariff is the lever to extract both. A company facing a 100% duty has enormous incentive to sign an onshoring plan or a pricing deal to escape it. The tariff revenue was never the point. The behavioral change is what to watch over the next several weeks. First, a wave of onshoring announcements as companies formalize the plans that drop them to 20%. We have covered the early movers all year, Lilly, Regeneron, Hikma, and others, and expect the laggards to follow now that the rate is live. Second, pricing agreements with HHS which exempt companies entirely but require concessions that will pressure US margins. Third, supply chain reconfiguration toward the lower rate jurisdictions and away from the highest exposure origins, chiefly China and India, for ingredients. The strategic read. This accelerates the reshoring trend that was already underway and hands leverage to the government on pricing. The companies that prepared look smart. The ones exposed to high tariff origins with no plan face a scramble, and the generic layer, still exempt until 2028, remains the hardest problem because the economics there do not support domestic production at current prices, no matter the tariff. For branded pharma, today is a manageable, if expensive, nudge. For the generic supply chain, the reckoning is just delayed. What strong earnings mean for M&A? The Q2 earnings strength matters beyond the quarter because it directly feeds the M&A wave that has defined 2026. Here is the connection. Companies acquire aggressively when they have confidence and cash. Strong earnings provide both. When J&J raises guidance twice, when every early reporter beats, when Novartis and GSK top expectations, it signals that the underlying businesses are generating the cash flow that funds deal-making, and it gives management the confidence to deploy it. The record M&A we have tracked all year, the 4 deals over 10B, Lilly's 11 acquisitions, the mid-cap buyers joining in, rests on exactly this kind of financial strength, the read for the second half. A strong earnings season removes a potential break on deal-making. Had the quarter come in weak, boards might have turned cautious, conserving cash against uncertainty. Instead, the results reinforce the conditions that produced the M&A boom: deep balance sheets, patent cliff urgency, and now confirmed earnings momentum. Expect the deal pace to continue into the fall. The one complication is the tariffs. The new cost structure introduces uncertainty into how companies model the economics of acquisitions, particularly for targets with overseas manufacturing or China-sourced assets. A company weighing a deal now has to factor in tariff exposure and the political risk around China licensing that we tracked all month. That may not slow deal-making, but it will shape which assets get bid up and which get discounted. Domestic, de-risked, tariff-insulated assets become more valuable. Overseas exposed ones get a haircut. The strong earnings keep the M&A engine running, and the tariffs redirect where it points. Can the next obesity wave challenge Lilly? Arrowhead's ARO-INB doubling tirzepatide's weight loss in an early readout is the kind of signal that, if it holds, complicates the narrative we have carried all year that Lilly's obesity lead is unassailable. It is worth taking seriously while staying appropriately skeptical. The context. We have consistently argued that Lilly, with tirzepatide, retatrutide, and oral Foundayo, has built a lead in obesity that competitors will struggle to close. That remains true for the current generation of drugs. But obesity is now attracting enormous scientific investment, and the next generation of mechanisms, amylin combinations, muscle-preserving agents, and novel targets like INHBE and ALK7 is advancing fast. Arrowhead's approach uses RNA interference to silence specific targets, a fundamentally different modality from the peptide agonists that dominate today. The skepticism is essential. The ARO-INHB readout came from a small group of patients in early-stage trials, and interim signals from tiny samples routinely shrink or vanish in larger studies. Doubling tirzepatide's weight loss is an eye-catching number precisely because it is preliminary and unconfirmed. Nobody should reposition their view of the obesity market on an interim phase 1 readout. But the direction matters. The obesity market is so large, projected above 150B, that even a fraction of it justifies enormous investment, and the incentive to find a mechanism that beats the incumbents is immense. Arrowhead being ahead on 2 differentiated obesity programs per Jefferies makes it one to watch, and it is a reminder that Lilly's lead, however commanding today, is not permanent. The next wave is coming. Some of it works through entirely different biology, and the early data, however preliminary, is starting to show what that wave might deliver. Our read states that Lilly dominates the current generation decisively, but the smart move is to watch the next generation mechanisms closely, because that is where a genuine challenge, if one comes, will originate. Catalyst, calendar, date, event, tickers. Today, July 31, Section 232, Pharma Tariffs, effective, large companies, multiple. This week, Q2 earnings, BMS, AbbVie, Regeneron, Viking, multiple. Late July BMS, CarXT, Alzheimer's, Psychosis, readout, BMY late July PTC, Sepiapterin PKU, readout PTCT August, Consultation tools Replimune, RP1 FDA response Ripla August, Paditan Capricorn, Deramiotel PDUFA, Adcom this week. Capri-Imminent Revolution Medicines, CNPV filing RVM, Diminent Lilly, Foundayo T2D filing under CNPV LLI ongoing Biotech Investment National Security Act, awaits committee vote multiple 2026 Niladalkib, FDA decision, ALK NSCLC, GSKQ3, 2026 Revolution, Daraxonrasib approval projected, Truist, RVMDQ3, 2026 Unicure, Huntington's gene therapy under review QREQ3 2026 ReganXBO, Duchenne gene therapy, BLA filing RGNXQ3 2026, ABVRE Apogee, Vertex, Crinetics, Ipsen, deals, close expected multiple Q3 2026 Merck, KGaA Biotechne, close expected MKKGY OGSH, 1 generic drug tariff clock, begins 0% until 2028, multiple sept, 19 Ultragenics, UX111, PDUFA, San Filippo Type A, Raricept, 29, Section 232, Pharma Tariffs, effective, all others, multiple NOV 14 Summit Ivo Neskimab, FDA decision, NSCLC, SMMT NOV, 30 Vertex Povetacicept, PDUFA, AGA Nephropathy, VRTXDEEC, 2026, Mineralis Lorundrostat, PDUF Amyloisdeek, 7 Lilly, Investment Community Meeting, LY 2027, Retatrutide, launch, anticipated, BMO. In LI 2108, generic drug tariffs begin phasing up multiple. The 100% tariffs are real, but the exemptions are the actual policy, and they point every large company toward a deal. Earnings confirmed the sector is healthy. And Arrowhead reminded everyone the next obesity wave is coming. Have a good weekend. What are you watching? Reply to this email. Visit the Pro Hub Read. Full article sponsorship slots for 2026 are limited. see packages and pricing. New Biomed Nexus signals, weekly sales intelligence for life sciences BD teams. Learn more